The banks won't tell you this, but did you know that you can cut 4, 5, 10 years out of your mortgage payments and save thousands and thousands of dollars just by doing a simple thing? Today, we are going to talk about how the banks are sucking the life out of your finances and how you can stop it. This simple secret lies in the fact that instead of making one payment per month, which most of us do, make bi-weekly payments. I'll give you an example. So let's say you have a payment of $3,000 a month and you paid first of the month or the 15th of the month. So instead of paying $3,000 one time, split the payments in two. So $3,000 divided by 2 is $1,500. So let's say you pay $1,500 on the first and another $1,500 on the second. You're not increasing your payments, but just by doing this, you will cut 4 years, 5 years, 6 years, up to 10 years and save thousands and thousands of dollars. The simple math is that you don't make any extra payments, but if you pay bi-weekly, what happens is you end up paying one extra payment per year. You end up paying 13 payments instead of 12, and you won't even feel it. And just by doing this, you will save thousands and thousands. All this is simple math. It is nothing complicated. Let me show you an example. Let's assume that you have a mortgage of $400,000 and you have a fixed mortgage rate for 30 years at 6.2% on a $400,000. I wanted to show you how much interest you end up paying. The banks won't tell you that, but if you buy a house or if you have a loan amount of $400,000, the total payments you make after your principal and interest over the 30-year period is $881,000. So on a $400,000 loan, you end up paying $800,000 on the interest. But most people refinance. So the loan of $400,000 by the time you pay off will cost you over $1 million. But, and a big but let's see how you can save money, save time, save thousands of dollars if you make bi-weekly payments. Let's look at this chart. So let us look at how just by paying bi-weekly payments, you will save thousands and thousands of dollars. According to this chart, again, loan amount of $400,000, loan term is 30 years, interest rate of 6.2%. But by paying it bi-weekly, you will end up paying a total payments of $778,000, 528, versus if you don't do the bi-weekly payments, you would have ended up paying $881,955,000. In other words, the remaining balance of $400,000 by paying $1,224.94 bi-weekly starting now, the loan will be paid off in 24 years and 6 months. That is 5 years and 6 months earlier, which results in a saving of $103,426 in just interest. Imagine that by paying twice a week or bi-weekly, you're knocking out $100,000. Of course, this is assuming that you start your loan on day one, but even if you have your loan for 5 years or 6 years or 10 years, you can still start doing it now and you will still save thousands and thousands of dollars, and you can save 3, 4, 5, 10 years off your 30-year mortgage. It is amazing how this simple math works. Nobody uses it, and the banks don't want you to know this at all. I always recommend that before you make extra payments or any changes in your payments, consult with your lender, talk to them, see if there are any restrictions, and if you make any extra payments, always let the banks or the lenders know that you're making those payments towards the principal and not towards the interest. If you're a homeowner, you've probably noticed how long 30 years really feels like, especially if you refinance. Now it becomes a 35 or a 40-year mortgage payment. That is a lot. You make that huge payments every month and it barely touches your principal. The truth is, your mortgage isn't built to help you win. It is designed to make the banks and the lenders rich and collect the maximum interest for decades and decades. Now, making those bi-weekly payments is just one way of paying it off. Let me talk about 5 or 6 new ways or better ways to pay it off faster. Let's start with you paying an extra $100 or $50 every month. Every month, if you pay $50, $100, $200, you will save thousands and thousands. Let's look at this example again. Using a $400,000 mortgage, 30-year fixed loan at 6.2%, your payment comes out to, now let's take an example. If you pay $250 extra every month, so let's say your mortgage is $1,200, but now you're paying additional $250 a month. Just by doing that, according to this chart, it shows that your monthly payment is $24.99.88 per month. month, but if you pay extra with an extra payment of $250, your payment is $2699.88. Your total mortgage payments originally would be $881,955, but with that extra payments, you will bring it down to $759,748. In other words, if you pay $250 a month starting on your first month of your mortgage payment, you will save almost 6.5 months worth of payments. Imagine 6.5 years you don't have any payments, and instead of paying $481,000 in interest, you will only pay $360,000 in interest. You save almost $120,000 in interest just by paying $250 extra per month. Imagine you paid $500 a month, $600 a month, but even $50 a month, you can knock out 2 or 3 or 4 years. A very powerful way to do it without cutting into your pockets. The second simple way to pay off your loan earlier and reduce your mortgage and your number of years is to make one extra payment anytime you can. Let's say December comes and you get a big bonus from your company, or you got a refund, or you got some inheritance, or you won the jackpot, $10,000, $50,000. Make that one extra payment, even if it's $10,000. That'll save you $30,000, $40,000, $50,000 over the life of the loan, because what happens is if you pay $50,000, let's say on year 1 or year 2, you are saving 28 years of interest payment on that principal. So you save a lot of money just by doing a simple thing. Imagine you paid $500 extra per year or $1,000 extra per year, and 1 year you paid $10,000 per year, or 1 year you skip a vacation. I'm going on a vacation next week and it's going to cost me a lot of money. Imagine if I don't go on the vacation and put that principal in my loan. That'll save me a lot of time, money, and interest payment. Maybe I should cancel my trip and pay. Let me think about it. Another simple way of reducing your payments is recasting your mortgage payments. So a lot of the lenders and the banks will allow this. So let's say you have $10,000 or $50,000 or $100,000 sitting there, and your loan amount is, let's say, $500,000. You can talk to your bank and say, hey, can you recast my mortgage? My balance is $500,000. Here's $20,000 or here's $50,000, and they will kind of readjust your payments. They'll make your payments lower, and that makes your interest payments lower. So over the years, you save a lot of money just by doing that. And on this, there is no refinance required. The other most widely used way of reducing your payments is to refinance. Now, there's 2 ways to refinance. Everybody thinks, oh, you know what? I have a 7% and I want to reduce it when the rates go to 5.5% or 6%. That's a great way to do it. You can refinance, you will lower your payments. But remember, if you had your loan for 5 years and now you are refinancing, you're adding 5 more years. So your total mortgage payment is 35 years. But even then, if you reduce your payments, you will save a lot of money. But here's another way to do it, and this is what I did in 2016, is a second way of refinancing, and a lot of people don't think about that, but this is the better way to do it. So let's say you have, I'll give you my example. In 2016, I refinanced my loan from 30 years to 15 years. My rate was about 5% at that time, and the rates dropped to 3% fixed. So I refinanced at 3% fixed from 5%, and from 30 years to 15 years and 3%. But I took one step further by talking to some lenders and my accountant. What I did was, at that time, we were just coming out of the recession. Things were still slow in the housing market. So I had 2 mortgage payments, the first and the second. And on the second, I was paying almost 7-8% because it was a HELOC loan, home equity line of credit. On top of that, I had 4 cars, me, my wife, and my 2 kids. They were in college. So I had 4 car payments, I had 2 mortgage payments, and I had a lot of credit card balance. I had almost $40,000 balance because coming out of the recession, I had borrowed some money and I had to make repayments, and I was behind on payments like a lot of the realtors were and everybody else were. So I had a lot of payments. I was choking. So at that time, I sat down with my accountant and my lender. My total payments, if I remember right, was about $4,500 a month, which included my first mortgage, second mortgage, 4 car payments, and my credit card bills. So when the rates dropped to 3% in 2016, and because I went to 15 years, my mortgage payments dropped to $3,000 a month from $4,500 a month. And instead of 30 years, I only had 15 years. So by consolidating all the debts, so if you have student loans or first or second and private loans, medical bills, consolidate all that into one bill. So you have a 30-year payment, lower the payments if you can, or when the rates drop again, you can refinance, and this way you can save a lot of money. Look at my payments. They went from $4,500 a month, which was 30-year mortgage. Total including cars and credit cards, it dropped to $3,000 a month. And instead of a 30-year mortgage, I only had a 15-year mortgage. And now, because I was making extra payments every month since 2016, I've paid 100, 200, 400, 500, whatever I can every month. And I'm going to be paid off in about 10 years, pretty much next year or the year after that. So this works. I have done it, and I can show you the numbers. The fifth way of paying is to make sure that make random payments whenever you can. Maybe in 2 months you can make a payment, or maybe in 6 months you can make a payment. Or if you say, hey, I don't have extra money, I'm very tight on my mortgage, I can barely make my mortgage. What we have recommended, if you're in such a situation, and I've actually recommended this to some of my clients who are struggling to make payments, but they wanted to refinance and get ahead in life and in finances, I recommended them to do a side hustle, do a side business, or do a part-time job, do Uber Eats or Uber driving. Even if you make $50 a month extra, $100 a month extra, $200 a month extra, maybe summertime, maybe Christmas time, whenever you can, anytime you can have extra payment. And if you don't have it now saved up or you cannot afford it, earn the extra money, $50, $100, $400 a month, and pay whenever you can. It doesn't have to be every month. It doesn't have to be like clockwork. Anytime you can make an extra payment, that'll help. Every dollar that hits your principal early saves interest later. Even one lump sum a year makes a big impact, or even $50 a month 3 times a year makes a big impact. This is simple math. Let me know in the comments if you are doing early loan payments, or if you know somebody who's doing it, or let me know which of the 5 you would consider doing it and make sense to you. The truth is, your lender makes money the longer you're in debt and the more loan you owe them. Start with just one move, whether it's refinancing or making recast payments or making $50 a month payment. Start with one, it'll go a long, long way. You will save thousands, if not hundreds of thousands of dollars, depending on your loan amount. Take control of your finances and get ahead in life. You will see your balance drop faster, and you'll finally feel in control of your finances. The banks won't tell you the secrets, but I just did. Please watch this video where I talk about additional ways and more detailed methods on how you can save on your mortgage payments and your interest payments. Thank you for watching.